The S&P 500 and Nasdaq soared to unprecedented heights today, marking a pivotal moment in financial history. This surge is driven by strong earnings reports and a significant drop in oil prices. Here's everything you need to know about this remarkable event. On May 4th, 2026, the U.S. stock market reached extraordinary milestones. The S&P 500 closed at a record high of 14,700 points, while the Nasdaq Composite surged to 15,200 points. This represents a 1.5% increase for the S&P and a stunning 2% rise for the Nasdaq compared to the previous day. The remarkable upward trend was largely fueled by robust earnings reports from major corporations, including tech giants and energy companies. In particular, Palantir Technologies announced impressive first-quarter revenue exceeding analysts' expectations, which contributed to the bullish sentiment in the technology sector. Meanwhile, a significant decline in crude oil prices, down 3% to $70 a barrel, provided further positive momentum to the market. This situation stands out from previous market rallies, as the combination of both strong earnings and falling oil prices has not been seen in recent years, making today's record highs particularly striking. The backdrop to this market surge includes a recovering economy that has shown resilience in the face of challenges such as inflation and supply chain disruptions. Businesses across various sectors have adapted to changing conditions, leading to improved profitability. Analysts have noted that the technology sector, which has been a driving force in the market's recovery, continues to innovate and expand, particularly in areas like artificial intelligence and cloud computing. This innovation has not only boosted individual companies, but has also instilled broader investor confidence. The impact of today's market highs extends beyond Wall Street, influencing consumer sentiment and spending. As stock prices rise, wealth increases for many Americans, which can lead to higher consumer spending and investment in businesses. This creates a positive feedback loop, potentially driving further economic growth. However, experts caution that volatility remains a concern, especially if inflationary pressures resurface or geopolitical tensions escalate. Looking ahead, analysts predict that the market may continue to experience fluctuations as investors digest earnings reports and economic data. The next few weeks will be crucial in determining whether this upward momentum can be sustained. If corporate earnings continue to impress and oil prices stabilize, the market could see further growth. However, caution is advised as uncertainties remain, particularly in the global economic landscape. The coming months will test the resilience of this rally and the underlying fundamentals driving it. The stock market surge witnessed today carries significant implications, marking what could be a pivotal moment for the broader economy. Key indicators show that investors are responding positively to recent economic data, including robust job growth and a notable decline in inflation rates. Over 200 companies in the S&P 500 reported their earnings this quarter, with an impressive average growth rate exceeding 15%. This strong performance has bolstered investor confidence, leading to a surge in retail investment as millions of Americans engage with the stock market. Notably, the energy sector is experiencing a renaissance, largely driven by falling oil prices. These declining prices are anticipated to reduce operational costs for both consumers and businesses, translating into increased disposable income for households. As consumers enjoy more spending power, we may see a subsequent rise in consumer spending, which is crucial for sustained economic growth. Furthermore, the burgeoning artificial intelligence sector is reshaping investment strategies, with companies like Palantir illustrating the transformative potential of technology-driven growth and innovation. The implications of this market surge extend well beyond Wall Street. For the average American, a thriving stock market often translates into better job opportunities, enhanced retirement savings, and overall economic stability. As corporations report strong earnings and invest in expansion, they create more job openings, thereby improving employment rates. Additionally, many Americans' retirement accounts are closely tied to stock market performance, meaning that a rising market can significantly enhance their long-term financial security. Looking ahead, analysts express cautious optimism regarding the sustainability of this growth trajectory. The Federal Reserve's monetary policy will be instrumental in shaping the economic landscape as interest rates remain a critical focal point for future investment decisions. Additionally, geopolitical factors and evolving supply chain dynamics could heavily influence market stability in the coming months. Investors must remain vigilant as they navigate these complexities. In conclusion, the current stock market surge suggests a robust economic recovery on the horizon, creating opportunities for growth and financial stability. As consumer confidence continues to build, we can anticipate a more resilient economy, with technology and traditional sectors working in tandem to shape future trends. The journey to today's record highs has been shaped by a series of significant events over the past few years. Following the disruptions caused by the pandemic, the stock market began recovering in early 2023, fueled by the rapid advancement of technology and AI. This recovery was not immediate. It was marked by a series of fluctuations as investors grappled with uncertainty. The Federal Reserve's decisions regarding interest rates played a crucial role, with multiple rate hikes aimed at curbing inflation. These monetary policy changes, while necessary to stabilize the economy, created volatility in the markets, leading to sharp fluctuations that unsettled many investors. Notably, the banking crises of 2023 shocked investors, prompting a reevaluation of risk across sectors. The failure of several regional banks raised alarms about the overall health of the financial system, forcing companies to tighten their belts and reassess their strategies. As firms began to adapt, the rise of AI technologies became a focal point for growth, capturing the imagination of both investors and consumers. The transition of firms like Microsoft and Palantir toward AI-driven solutions has been pivotal, showcasing how technology can drive efficiency and innovation. These trends collectively set the stage for the current market dynamics, which are defined by optimism and a renewed focus on technological innovation. The integration of AI into everyday business operations is not just a trend, it signifies a fundamental shift in how companies operate and compete. Looking ahead, as businesses continue to harness the potential of AI and other emerging technologies, we can expect a continued surge in market activity. The next few years may bring even greater advancements, shaping a new economic landscape that prioritizes innovation and resilience. Today's market performance has set the stage for several potential scenarios that could significantly influence investor sentiment. The recent rally, driven by robust corporate earnings and positive economic indicators, suggests a strong appetite for stocks. This enthusiasm follows a period of uncertainty where concerns over inflation and interest rates weighed heavily on market performance. Inflation has emerged as a persistent issue affecting consumer purchasing power and overall economic stability, prompting discussions about the Federal Reserve's next moves. Should inflationary pressures rise again, the Fed may feel compelled to implement additional rate hikes, which typically dampens market enthusiasm and could lead to a slowdown in borrowing and spending. Moreover, global events play a crucial role in shaping market dynamics. Recent geopolitical tensions, particularly in energy-rich regions like the Middle East, could disrupt supply chains and impact oil prices, further complicating the economic landscape. These disruptions not only affect energy costs, but also ripple through various sectors, influencing manufacturing and logistics. Investors are advised to keep a close eye on developments in these areas, as they can lead to swift market reactions and volatility. As we approach the second quarter, the upcoming quarterly earnings reports from major companies will be pivotal. These reports will not only shed light on the sustainability of the current growth trend, but will also provide insights into how companies are navigating challenges such as labor shortages and supply chain disruptions. Looking ahead, the stock market's future will hinge on various factors. Will the momentum be sustained by ongoing technological innovations, particularly in sectors like renewable energy and artificial intelligence? Or will external pressures, such as rising interest rates and geopolitical instability, steer the markets in a different direction? Investors must remain vigilant and adaptive in this unpredictable environment, as the next few weeks will be crucial in determining whether the market can maintain its upward trajectory or if a correction is on the horizon. As we ponder the future of the stock market, what will be the next catalyst for change? Share your predictions in the comments and be sure to subscribe for daily deep dives into the most pressing financial stories.